And we're joined by XPO CEO Mario Harik. Welcome to both of you. Frank, kick us off.
All right, Kelly, thank you very much. Mario, great to have you here. Congrats on the quarter. I want to ask you about this quarter. First, just for the audience to clarify, you're a less than truckload player. That means you put different shipments in one truck. Some of your customers are generally industrial manufacturing companies. You get about 2/3 of volume from them. They've been deeply impacted by tariffs. I'm thinking about a Ford and a Caterpillar that just reported. How were you able to raise the revenue per shipment up 7% while volumes were down?
Well, Frank, for us, the first quarter was a quarter of very strong execution. But the main driver of our revenue per shipment improvement were a combination of providing a great service product for the customer is number one. And then number two is we're launching new services, new add-on to our shipping service that our customers need. For example, let's say you're somebody shipping into a trade show or you're somebody doing a retail store rollout. You are willing to pay an incremental fee for that service. And we're launching more and more of these services that are resonating with our customers.
Mario, speaking of new services, you mentioned this on the call, Amazon trying to get into the LTL space, UPS trying to get back into the LTL space. How does that potentially impact your business? How does that impact the sector, whether it's pricing or whatever else? And of course, FedEx is spinning off its LTL business into its own company.
Yeah, so we see those as being low. They won't have a big impact on the traditional less than truckload industry, because when you think of both of these players, one is more of a parcel provider. So it's not your traditional LTL freight, which is usually palletized freight, more than 1,000 pounds worth of weight that you are moving across docks across the country. That's very different than what a parcel provider does with heavy parcel. And similarly, on the retail side, many large retailers have used excess capacity to consolidate partial truckloads across the network, but that also doesn't compete with your traditional LTL service either. So we see these as being low threats overall to the overall LTL industry.
Mario, can you just give us a very sort of plain-spoken status of U.S. economy and freight right now? Is it at a standstill? Others are saying, no, things are absolutely fine. This is more of a risk going forward. What is activity like right now, and how does it compare with past periods like COVID or past recessions?
Yeah, so it's very hard to tell, Kelly. Currently, if you look at the current freight environment, because ultimately when product moves to the U.S., it goes into distribution facilities or in some cases into factories to build new product, in some cases directly into stores, and then it moves effectively across the country. We, as a less than truckload provider, we don't have exposure to imports coming into the country directly. We move the freight once it's inside of the country. What we are seeing is a lot of uncertainty. We are seeing customers changing how they are sourcing the product or where they are building the product. And ultimately, that's going to be good for domestic trucking over the long term. And our goal is simple. We want to be there for our customers. If the customer is moving the goods from the West Coast of the U.S., say to Kansas City, or they're moving the freight from Dallas, Texas to Kansas City, our goal is to be able to provide that solution for the customer. But we are seeing an uncertain environment about how things would look like. Although in the near term, for us, the month of April was better from a demand perspective than the typical than what we saw in the month of March. It was in line with seasonality on a sequential basis.
Mario, of course, everybody knows we were looking at the president's first 100 days yesterday. I want to ask you, what do you make of the president's policies in these first 100 days? One of his big goals is to increase manufacturing here in the U.S. As I mentioned, you get about 2/3 of your volumes from manufacturing and industrial. Do you think these policies are effective? What are your customers saying to you about moving production back here to the U.S. where you would benefit? You'd be moving the raw materials, the finished goods around. So what are they telling you when it comes to planning for capacity?
Well, overall, in terms of the policies of the administration, that's a better question for the American people. But in terms of what we are doing for customers, we are seeing more and more companies wanting to switch where they are producing high-value product. And we're not talking about the low-value goods where it's labor-intensive to build some of these products. For high-value goods, we are seeing customers doing more nearshoring of manufacturing. To give you an example, one of our large industrial companies, a company that builds electrical components, had moved some of the production capabilities from Mexico here to Texas. And they asked us now, as you said, Frank, to move both their inbound freight into that facility, which includes parts and raw materials, as well as the outbound freight coming out of the manufacturing plant. So over time, we see that doubling up the demand on domestic freight. And it doesn't mean that all the manufacturing is going to be nearshored, but whatever percentage does get nearshored, you're going to see more domestic trucking needed for that.